Good day. This is the Elliott Wave weekly update for the S&P 500 being recorded on Saturday, August the 24th, 2024. I am going to start here on the SPX, and the first thing you're going to notice is that I am not covering both an alternate and a preferred count. I moved them both to the preferred count, primarily because we're within a few points of moving to a new all-time high. That high in the SPX is 5,669.67, and the high thus far, I need to bring it down so I can find it. 1 second. The high thus far on the return is 5,643. So, and the rally on Friday brought us up to 5,641, almost 42. So we're within a pebble toss, not a coin toss, not a rock toss, but a pebble toss of reaching new all-time highs. So I thought it prudent to include that we likely are going to go up and break that high, and now I shall delve into how. So what we've kind of done is we did come down in an ABC. We did reach into this box. Didn't take all that much time, but then that equaled the time. So again, it could be all done, and now I've marked it as such. Although I was running, as I did in the NASDAQ, the alternate on the cash market with the preferred on the futures market. But with it being so close, so the possibility of it finishing and just dropping out of the sky from here, yeah, it's there, but I'm not going to give it a high probability right now, not after Jerome Powell's rather dovish comments during his speech at Jackson Hole, at the Jackson Hole Convention. And so that, I think, just going to carry through. Whether that's the correct move or whether it's not the correct move, not my call, but I believe that the market will continue to do or put on the risk on trade. And what that involves, of course, is selling the VIX and taking that money and putting it into the volatility of the underlying companies within the SPX. Right now, that happens to focus a great deal on Mag 7. There are other stocks, of course, that are just exclusive to the S&P and the Dow for that matter, and not in the NASDAQ. But I believe that what will be the contributing factor here will be these rallies that are going to be taking place again primarily within the Mag 7, but within the top 10 stocks within the S&P, so the heaviest weighted stocks. Now, that risk on trade really is the buying of calls, the selling of puts, and that's the trade itself. So these positions are built for a continuation in the rally, a strong continuation rally if they're doing it from these levels. But as we noticed on Friday, the VIX future was down $1, which is a pretty hefty move. But a lot of that was on the basis of that dovish speech. And that just kind of sets a lot of things up. Now, not going to make any reference to, do I believe that's the right or correct move, right or wrong move, I should say. That's not really up to me. I'm not the one investing the money. And so we will see, because what comes along with that is it changes a lot of what the flows are going to show us. And so we're going to see levels start to move up that, if broken, will start to really impress upon traders risk off. They're going to want to take that risk off trade or balance it out a little bit by not being short so many puts, by maybe cutting back and maybe putting in some downside protection, some wings, so to speak. So a lot to be seen, a lot can happen, but right now that's what I'm seeing. And so I think it'll be reflected. Now, again, as I mentioned when doing the NASDAQ update, so if you listen to both, sorry for repeating myself, let's understand that I think that when they come to that September meeting, I think that they're not going to be really cutting like a half or 3/4 or a full point in interest rates. I believe they will move forward with caution as they have all along, and that if they feel that we're reaching that inflation target of 2%, which yet to actually be seen, they're just saying that they're feeling very confident that they will reach that level, that they will start to cut the rate. The rate, as it has been for quite some time now, is 5.25 to 5.5. That's the range. That's the range on the Fed, from the Fed, 5.25, 5.5. And that's what they're lending at. Now, what does that suggest? Well, we might get a 1/4 point cut, which takes us to 5 to 5.25%. Now, what does the market really want to do with that? Well, they're going to jump. Every algorithm in the world is going to jump all over this thing because, hey, cut, hey, reduce, hey, easing of rates. Boom, bullish, bullish, bullish. But what it really states for the type of move that I think the market may or produce, they're going to have to cut a half and then another half in October and then another half in December. It's just like these meetings are going to have to be consistent and dropping, dropping, dropping so that we get over a point by the end of the year. I think that would support the type of move that I think the market can make now. Now, putting it also into context that I think that a period of inflation, I think it's like if we just look at history, a period of inflation, of strong inflation, is corrected by a period of deflation. Now that's always considered negative because the price of these valued companies will come down. But it's just an adjustment. It's an adjustment period that they're not worth as much as people are out there tooting. And so, yes, we're going to see money kind of not necessarily get tight, but people are not going to be spending as much. Or when we're in a period of deflation, things tend to contract a little bit. But consider that it's just a natural reaction to prices being inflated. They become deflated. And that's actually what brings the inflation down. But notice the one thing, and I mentioned this again when I did the NASDAQ update, that the Fed and the government does in reporting inflation numbers. The CPI conveniently, which I can't remember when they actually started doing it, but it excludes food and energy. The two most volatile in terms of inflation, the two most volatile parts of any inflation reading. They've decided in that number that they report, they're excluding, and they'll say CPI raises, drops, percent, excluding food and energy. Now, again, as much money as someone may or may not have, they still go to the grocery store. They still have to buy food. They still have to buy energy. They still have to pay for utilities. Maybe they're not the one doing it, but whoever does can see that those rates aren't coming down. So again, is inflation really coming down for average, middle of the road people? I don't think so. So in any case, I think the whole thing can be tempered in terms of like we're racing up because wow, we're finally getting this rate cut after 6 months waiting for it. It was supposed to start in March. It's going to come in September. 6 months after the market demanded lower rates, they're finally getting it. So it could be, this total overreaction. And what could that then, in terms of how I'm viewing this market, what could that produce? Well, it could produce this minor fifth wave up, and that's then going to complete the intermediate third wave and set the stage for an intermediate fourth wave decline, which brings us back to this area, right? Except now it'll be this area. Why? Because once we get up to the high for intermediate wave 3, which could be as high as 63.50 or right around 6,000, 59.67. those could complete the move. I'll get into that in just a minute, but let's just say it gets up there. That completes intermediate wave 3, and we get a turn and we bring it back towards the low of what I'm now marking as minor wave 4. And in the cash market, that is 5,120, 5,119 to be exact. And that's where we would expect the market to come back to. So all of this hoopla, rah, 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 we're going to get up, we're going to get to 6,000, we're going to go higher, higher, higher. And then suddenly it stops and we come back and we end up back down here at 51. They're all going to wonder why. But the Elliott speaks volumes in terms of, well, what's going to surround that? What's going to be happening along with that? We're going to see that, yep, we got a rate cut, but nope, it didn't provide the rally that we thought we would get. And instead, we get a down market. Doesn't mean much, right? Because let's consider that's keeping with the Elliott count. And I've been discussing for the last 6 months or so that when we're done with minor wave 5 and therefore intermediate wave 3, and we come back down in an intermediate 4th wave, we still have an intermediate 5th wave to do, which again reverses and takes things to an additional new all-time high. And it'll be from that high that we then finish intermediate wave 5, primary wave 5, and cycle wave 3. Now, whether that actually is going to take place in 2025, or we got to really, this whole thing rolls out all the way into 2026, yet to be seen. But we still have the finishing rally up to finish minor wave 5 and intermediate wave 3. We have the intermediate wave 4 decline, which will consist of a minor ABC down, and instead of a minute ABC, it'll be a minor ABC. So it should be a little bit larger. And we'd be looking for it to drop from wherever it comes to. We're looking for it to drop, well, let's just say between 800 to 900 points, or as much as 11 to 1,200 points. It depends on where we get. So now let's talk about this traveling up. Now, we've not broken above that high that we created in July at 5,600. I'm going to call it 5,669, or you could say 5,670. That was the high that completed minor wave 3. Minor wave 4, quick and to the point, as far as I'm concerned, because we're so close to breaking to another new all-time high. That would be one thing. Now, yes, there is an outside chance that this could be an ABC and still only B wave A, and we're in a B wave. And yes, I think you could consider maybe this is a flat. So, I mean, it's a 3, 3, 5, and that would suggest that we could get a flat B wave, which means it can go up to that high at 5,670 in that area, or possibly even give us an irregular. And isn't that something? Like here we are talking about that again. I'm not expecting it, I'm just discussing it. And if it does that, then it still remains within a minor 4. We could get above there, put in another new all-time high turn, and come all the way back down to this area again. And then we would consider it a flat minor 4. But if we get high enough above this and it boosts itself, then we would have to go with the fact that it is the minor 5th wave coming up. Now, what can I say in terms of, we're going to use this daily chart, and I'm going to open it up a little bit so we can see. Now, I just want to put in some fibs, and again, taking from there down to there, and then I'm going to add them. So we want to edit, and I'm going to add 236 and 382. And those, and all the rest of these levels I'm taking off because they have no meaning right now. But these would be irregular. Look how high we can get. 5880. Call it irregular, come all the way back down to here. Right? Irregular flat is the exact name. Or we get up to 5670, maybe even poke our nose above there a little bit, and then turn, right? Because here's the other one that comes into play, 5800. Maybe we get up to 5,800 and it's still an irregular B wave and we come all the way back down. Not necessarily expecting that, but it's there. So I'm talking about it. The possibility is there, so I will talk about it. Now, what I believe is that there's a lot of energy, but you're seeing that we can get up to 5,800 and still be in a B wave. If indeed this is going to count as a 335. Okay, so those are the givens that have to remain into place in order for this to come in. And then if we get that turn and it comes flying back down, then we're going to be more interested in an irregular rather than the completion of a minor fifth wave. So for me to say that, well, I'm going to continue to count this in the alternate would mean that I count this as an ABC down, minute, and then, minuet, and it's a minute A wave, and this is all going to be minute B wave, no matter if it gets up to here. But I'm not necessarily looking for that anymore because of what I'm seeing in terms of the flows, in terms of what I see is building behind all of this, because of all of the hype and the anticipation and the relief that, oh my God, we can go up again because they cut the rate at long last. That in itself could produce an irregular B wave, got to tell you. But I'm going to leave it a little bit that energy will carry us up, that we do end up completing the minor fifth and the intermediate third. Now, what are our levels? Here's the first. So we have 5816, which obviously is a new all-time high. And that will be where minor wave 5 is 1.618 times the length of minor wave 1, which is way back there. And then we have the yellow is for the intermediate third, because remember, that's what we're going to be completing. If indeed we're going to be finishing minor 5, we're also going to be finishing intermediate wave 3. Well, intermediate wave 3 would be 3.618 times the length of intermediate wave 1 at 5968, let's call it. So up in that area. And so they're relatively, they're over 100 points apart, but in terms of a rally, they're kind of in the hood. If this kind of goes up but it stops there, then it's still, as long as that fifth wave fits, so the structure fits, right? If we're in a minor 5, it's going to have 5 waves of minute degree. And we're going to be taking out all that so we can just see the 3. And then the 4, and then the 5. And the 5 could certainly extend as well. Right now, 1 is the shortest wave, 3 is the longest because 5 hasn't really started. But once it does, it can be longer than 3 because 1 is the shortest. Remember the rule. The rule states that wave 3 cannot be the shortest out of waves 1, 3, and 5. So 5 can get us all the way up here. No problem. It most certainly can. And in fact, if it really goes full bore, like something really catches fire, i.e. NVIDIA's earnings, or other ones that are still out there waiting to happen, well, bing, we end up here. Or some other event takes place, i.e. somehow peace is declared in the Middle East. Somehow Putin pulls out of Putin pulls out of the Ukraine and declares that insurgents over. Or, other things that have really hung a gray cloud over the market get resolved. That we see stabilization in other areas. So again, that would build towards, we're getting to these upper levels and we're finishing an intermediate third wave along with a minor fifth wave. So we've got 2 scenarios still. I will run them, but I'm not showing it because in all honesty, it's not necessarily something I'm going to be looking for, because I believe the power that's going to come in to fuel that the balance of this minor 5 could really produce an extended fifth, which means the minute fifth wave extends and we get probably another extension within it. So 3 of the 5 extends on its own along inside this extended fifth. So it could, without a doubt, gain enough power to get us up there. And there are things still unresolved that could be resolved, and other data being known. So, for example, the CPI and the PPI continue to improve, but they improve even more dramatically than they have. That'll fuel the fire for this thing to go to the moon. If we get a larger, say they cut it a half, they reduce the rate by a half a percentage point. Wow, that would be big. That'll give fuel to the fire to push harder. Well, we will see that risk on trade just get going. So does it mean it's just going to keep going? No, I do believe we will correct. I do believe we'll reach a level and like that's enough, and something will happen, and it will trigger a reversal. And then we'll be all in. I mean, consider that these reversals that we had, like here, now they're looking so small, but this was risk off. This was a negative gamma atmosphere. The market couldn't catch a bid. Every time it did, the sellers took care of that and pushed it even lower. Now we're seeing the opposite. The market can't catch an offer. In other words, it's like every time they try to sell it, the market turns around and buys it double intensity back up. That's the risk on versus the risk off. That's what happens in a risk on atmosphere. That's what happened in a positive gamma atmosphere. When the market is tanking, the market is going down, that's a negative gamma atmosphere. Now, these are big changes to how markets are viewed, to what traders, particularly position traders, who may be more macroeconomic type traders, they're going on the fact that interest rates are either higher or lower. And when they start to cut the rate, they feel that that's a reason to switch position and go bullish. But then again, what's really in control of our markets? And again, I continue to say a heavier control of our direction, short term, is the flows, the capital flows, the options flows, and the gamma. Those are measurements. Gamma is a measurement. And when we are in a positive gamma atmosphere, the market just continually moves higher because of the positions that are going on. And when those levels that should be resistance, because the gamma is built up there, and it should hold as resistance and get broken, and they continue to move, that produces a period of adjustment that cannot be denied. So unless they want to let those positions just absolutely take all their money or create a huge loss, they cover. And what do you do when you're covering short? You buy. Otherwise, you're going to be buying all the way up because you're just going to get shorter as the market marches higher. When we pass those gamma levels that should be resistance, it's usually because there's some short gamma sitting there. And that then you got to cover, and they have to cover that. So, and then we might have a call wall. Call wall is where that's kind of like what, and we're coming into September. So we're getting right into that period where Morgan Stanley, which holds a clear distinction of once a quarter. So we've seen them now pretty regularly, January, March, I think it was June, and now I think it's going to be September. So in September, they roll that hedge, and it's a hedge of a very large hedge fund at JP Morgan. Now, these are truly professional traders. You will not even know when they're doing it. And if we're getting close to that higher call wall, which I think is right now 5,700, maybe we'll come in tomorrow and we'll see that they've shifted it even higher to 5,800 or even above that level. And we won't, you just don't know, because this is how good I'm giving credit to JP Morgan's traders who take care of this hedge fund. This is all done with lightning speed and just all of a sudden it just shows up, which I think is just awesome. I mean, as a trader, I just watch and I'm in envy of how good they're at doing that trade. Now, what am I trying to say here? Well, if the call wall gets shifted, it's just going to bring on more risk on. And those that are left there, because if there was a huge amount of gamma sitting there on the short side, then you know what happens? If somebody moves a big enough position and you look around, and like, oh my God, the gamma position just really shrank. I'm the only one sitting there. And suddenly it breaks, it'll get even more seriously unwound to the upside. So again, that's just speaking in terms of what the overall atmosphere is in between short gamma, long gamma atmospheres. We are in and remain in a long gamma atmosphere. Now, I will say that on Thursday was we kind of cracked and we started to drop pretty strongly. That I think was a lot of that risk on either being reduced or some getting out and maybe just being neutral. Obviously, since we walked in on Friday, and when Jerome Powell started to talk, boom, caught fire, and the market just kind of flew. So things that I watch, and again, it's just something to pay attention to. All right, so let's take a look at the moving averages. So I'm going to go like this so I can see them. For the size that we're going at, look at this. That's from the high. This is the 50, not even the 200. The 200 is like really sound asleep and just moving in a straight line across. It is support. The 50 moving pretty much now in a more straight line across. Now got a little bit of an upward bias, but basically flat, providing support. The 20, you'd think it would be a little bit tighter in its angle of rising. This is the daily. Still pretty flat. Just below 5,000. That's support. Even the 13, which is our shortest one that I use, is kind of like going a little bit flat. Now it's got a little bit more of an angle because it had a solid rally on Friday. But they're not really screaming, we've got so much upside still to do, which is why I kind of look here. It'll be a good pop, and we'll get that'll follow, but these might stay flat, depending on actually how it trades. All right, let's go over and take a look at the S&P and the excuse me, I have a little bit of an ant problem. That's me just clicking my keyboard to get the ants off of it. An ant, it wasn't ants plural, it was just one ant. Okay, in the S&P, let me just straighten this out. We're going to start again on that daily. Oh, sorry, I didn't change it. Let me do that. So what we got going on, same deal, but this one I switched last week to where minor 3, minor 4. And again, beautifully executed, guys. Came all the way down, nice ABC. But again, you can count this as a 335, which kind of suggests that we can get up to a high, which was 5,717.75, 5,018. Nope, the high is 5,721. Now, where did we finish off on Friday? We finished at 56.62. That was the high. And on Thursday was 56.65. So 57.21, 65, 60 points. That's just a small rally away. So we're moving into new all-time highs. So I went ahead and I said, well, that did fit in terms of minor 4 coming into the price territory and towards the low of minute wave 4. Time-wise, they equaled. Fibonacci time sequences did not match. And we were looking for it to go longer, to unfold over a longer period of time. That might still be the case. Again, same thing in the S&P in the futures market as in the cash. If this is going to be an ABC or 335, then the thought of where we can come in a flat takes us all the way to 57.21. And if it equals that, we can turn and come back down to this low in a C wave. So I have to keep them both going right now, although I'm not labeling them as such, based on the fact that I think the flows are stronger to continue the upside. A sudden shift would have to be coupled with a real strong shift in risk off. It has to be really get all that risk off, or equal it out a little bit. In other words, you start covering those puts. You start putting on some put protection. You start putting on some downside protection. Because right now the risk on trade is like, it leaves this big void for anything moving lower. Just the way they're kind of doing it. All right, so here, taking it off the daily, I'm going to bring it down. I'm going to take it right to the hourly because our concern is here. So if indeed, if this is the completion point for minor wave 4, we're in minor wave 5, and it's going to consist of 5 waves of minute degree. 1, 2, 3. So that high was the completion point for minute wave 3, minuet wave 5. So 1, 2, 3, 4, 5. Beautiful third wave. On an Elliott basis, beautiful third wave. So our first stop for wave 4 would have been in here. Well, that low just absolutely touched the top side of it. What I've included here, in fact, I want to do one thing. I don't want confusion, so I'm going to turn off that extension, and it pulls it in so that you can see it's a part of this fourth wave. This would be minute wave 4. You see, I've not labeled it yet, although I've put in a Fibonacci extension as if that did complete wave 4. Why? Well, look how close we are to moving to a new all-time high, right? 56.62 versus 56.65 to get above wave 3. That starts to put us in, okay, we're on our way to break 57.21. I could probably push this a little bit and think, okay, we could get a little bit of an irregular B and then still, and I'll show you what that'll look like, or what our fibs would look like. All right, so now I'm going to come off and do this, and I'm going to take all of those off. I'm going to put 236 and 382, and those are going to be in the minute color. This is grayish white, and I don't want. Come on, get out of my way. So there's 1236. Where's 1.382? So we can see those. And then this one above is if this is minute 4, and we're in minute 5, 618 is 57.30. So here we have where the market, how high can the market get above there and still be considered a fourth wave, and then we still come back down and we still come into this, not down here, into this higher level. So again, both S&P and the NASDAQ can do both the same thing. We kind of come up, we push a little bit above that, we produce an irregular, that's 1.236, 1.382. So we have 56.85, we'll call it, and 56.96, 97, and I will even say up to 5,700. Because I know you know the algorithms are going to want to go up there and give it a little tap and see what might be above it. So even so, then that would include that we turn, we drop, we come back below and drop into between 55.51 down to 54.80. Not all that severe, although could be on 200-point drop, right? If we get up to 56.96 to 54.80, it could be. But that would also suggest that the balance would be 1.618 coming down. Right, so wherever this were to top, and it turns into an irregular B wave within this small minute 4, then we'd be looking for 1.618 coming back down. And that likely still going to be somewhere around in here right now. So how do I want to leave this? Well, hourly chart, RSI, did represent the strength. No problem. We did the strength part. But I think, we start to move into overbought and we start to correct. So how hard do we push on Monday? Well, we could push pretty hard and hold it up there, as we've seen in the past. They hold it, but then when they let it go, get out of the way like they did last week. Get out of the way. And they went from almost overbought to oversold. All in a day. Could we do that again? Yeah, we could. And that would keep it below that high, and this would be A, B, and we come down at a C, and then we'd be looking again for these levels. So this is all remaining alive. My personal view on how I think I'm going to want to trade, I'm going to look for a continuation to the upside. I think that comes first, no matter what. I think just follow through from Friday, follow through from how things come out, but we'll find out. You'll get a clearer, I think, not. I take back the word clearer, but it might be cleared up by Globex opening tomorrow, or just how things trade in Globex before we actually line up to open our own markets on Monday. So that's where I'm going to complete all of this. And next week, we have NVDA reports on the 28th. So NVIDIA reports on Thursday. So we'll see what control or no control or whatever is going to happen. We're going to have to let it happen. And the next Elliott Wave Daily update will be on Monday, the 26th. So actually, NVIDIA reports on Wednesday.